GM, good morning. Welcome to the Milk Road Show, the daily crypto show that's more reliable than setting 5 alarms and actually getting up on the first one. I'm your host, Jay Hamilton, and today we are joined by Milk Road co-owner and head of research, Kyle Reidhead. We're going to talk about how do you not fuck up this cycle and how do you achieve your number one goal, which is our number one goal as well for you, which is to make the most money possible in this cycle, but do it in a strategic and planned out way. And we're also going to tell you guys some exciting news about what's going on the Milk Road Retreat happening right now in Canada. Meet Uphold, a trading platform that's changing the way you think about money. Imagine this, earning up to 4.9% APY on your US dollars. No catches, no lockup periods, and no fees. And yes, it's FDIC insured up to $2.5 million. But it doesn't stop there. Uphold is a global platform with over 10 million users in more than 150 countries. They offer access to over 300 digital assets, which you can trade, store, and exchange with confidence, knowing Uphold operates with a 100% reserve and a transparent model. So how does it work? Create your account, fund it with a few taps, and you're ready to go. Want to learn more? Click the link in the description and join Uphold today. Kai, welcome to the show.
Thanks. Glad to be here once again. Glad to be beside you. We were together back in Salt Lake 2 weeks ago, and we're here in Muskoka, Canada. Not as nice of a day, but we've had a beautiful week in terms of weather.
It's nice to be recording in person.
It's fun.
We don't get to do this often enough. Okay, we're on the annual Milk Road and Impact 3, our marketing agency. We're on our annual retreat this week. We got about 20 of our team members from all over the world together, and we've had some really productive conversations about this cycle and what we're aiming to do for our listeners. Can you break down for us what we've been discussing and maybe share with the audience what we're excited about?
Yeah, for sure. So interestingly, we have our Milk Road team. We also have our Impact 3 team, which is a marketing agency. And so a lot of the discussions is how can we continue to grow? Obviously, how can we drive more revenue? All these kind of things. We're building a business here. And the one takeaway we all had was the thing that matters the most is how do we make sure that our audience, our listeners, make money? Because if you make money, then you're more likely to stick around and continue to listen to this podcast. If you don't make money, you're probably going to leave. And we saw this happen last cycle. Most of the people on our team were here last cycle. And a lot of people made money. A lot of people lost a lot of money during that cycle. Those people who lost money, they left. They were gone. They stopped listening to our podcast. They stopped listening to or subscribing to newsletters. They were out. And so I think the key thing, no matter what, that we've decided this cycle is how can we just make sure that you guys listening don't get rugged. Don't invest in the wrong stuff, right? Make sure that you guys feel confident in your investments, know what you guys are doing, and ultimately at the end of the cycle, come out on top. Mm-hmm. Will you make 100x? Will you make 1,000x like many of you want? Probably not going to lie. I don't think we can do that. But one of the key things in crypto, to be honest, is about surviving. If you just survive from one cycle to the next, which is as easy as if you just hold Bitcoin for the last 15 years, you're one of the best investors in the entire world, right? And yet, what's funny is everyone goes, I want to make more. I want to do more. I want to trade. I want to buy these tokens. I want to do this. I want to do that. And the thing is that so many people end up getting wrecked. And if you haven't been in a cycle before, that might seem weird to you. You're like, well, why, right? This industry grows by so much. It doesn't really make sense. But if you were in this last cycle, we were talking to a few people on our team who had their money in Celsius. Someone had their money. He actually said he tried to diversify his lending last cycle by putting some in FTX, some in Celsius, and some in Voyager, all three of which went bankrupt, right? So we all have our battle scars from last cycle. A bunch of us were in Terra Luna, right? And so many people actually lost money last cycle, came out worse than they were, which to me, and this is actually the reason why we started Web3 Academy originally and now are continuing this journey with Milk Road, is I have a bunch of friends who got into crypto after I did last cycle. Previous to the cycle, I was screaming to everyone, get in, get in. They didn't. They waited till Bitcoin got to past all-time highs. Finally, like, okay, Kyle, let me get in on this stuff. So they bought, but then they started going, super risky. They didn't really know what they were doing. And most of them came out having less money than when they came in. And to me, that was insane. That just makes no sense. You have an industry that literally 10x's in, a matter of a couple of years. Even from bear market to bear market, it's at least a 10x. And so many people came out making no money. Mm-hmm. And to me, that's insane. And I just want to make sure, like the key thing I want is just to make sure that none of you guys have that experience, because the opportunity is just too big here. So we can't allow that to happen to you guys.
And where do these mistakes happen the most? They happen the most in the banana zone.
100%.
And we're not there yet, and that's important to know. And we believe it's coming. When? It's tough to predict exactly when, but it is coming. Everything outside of World War III, everything's lining up and looking pretty good. The election coming up soon will be a major milestone and could be a big catalyst as well. But for those who weren't around in the last cycle, what does the banana zone look like? What is it like in that period of the cycle?
It's a vibe. Let's call it that. It's called the banana zone because it's literally, it's called the banana zone because the chart looks like a banana, but it's also because it's literally absolutely bananas. Last cycle, so if you were in it, in the banana zone started around the end of 2020 last cycle, and then throughout most of 2021. Even when we topped in, I think, November of 2021, the banana zone still continued. Like there was still a lot of hype and craziness for a good 6 months after the top, right? The same thing happened the cycle previous to that in 2016, 2017, which is the ICO boom, which was, again, you had this crazy exponential growth, but just absolute bananas. Things that you're just like, how is this even happening? None of this makes sense. But in those moments, everything makes sense, or you think it makes sense, right? Like last year, for some reason, or last cycle, it made sense that these tokens that had no purpose whatsoever were going to 10 billion, 20 billion, 30 billion, 40 billion, $100 billion valuations. I think Doge made it somewhere close to that. It made sense that these like NFTs that were so hard to buy and it cost $100 to trade these things were valued at like hundreds of thousands of dollars, millions of dollars, some of them. And for whatever reason, everyone in that moment was like, this is it. This makes sense. This is the future. And if you were able to sort of peel yourself out of that, like especially now or the last couple of years where we've all been sobered up from the banana zone, we're like, yeah, that made zero sense. That was absolutely stupid, right? Metaverse valuations were just through the roof, and yet there was no technology that had these metaverses actually doing anything whatsoever. It was all vaporware. And so the banana zone is this time where expectations go way, way, way past fundamentals and way farther than you ever believe that they will go. The banana zone is weird because we sort of experienced a little bit of it this past year in the beginning of the year. In January, February, March, let's say, we were running up since, end of Q3 2023. And, meme coins were pumping, things were happening, and everyone got that excitement back from crypto. And what's interesting is like that happened, expectations got a little bit crazy, but it wasn't too bad. Nothing got too crazy back then. Yeah, there was like Dog with Hat was going to be on the Sphere in Vegas. These are signs of the banana zone where the weirdest things happen. But in the banana zone, these things happen, and you're like, there's no way it could get crazier. And then it gets crazier. And you're like, there's no way it could get crazier. And then it does it again, and it does it again. And in these moments, everything goes up. Valuations are through the roof. You can close your eyes, blindfold yourself, go to CoinGecko and throw, whatever amount of money you want into 10, random choosing tokens on the top 100 in CoinGecko, and you're very likely to do well. This worked in 2021. This worked back in 2017. It didn't matter what you bought. Basically, everything goes up. And that's kind of the banana zone where you feel like you're a genius investor because everything you buy, everything you recommend your friends buy, all goes up. And it goes up extremely fast, like more than you can ever imagine, versus like comparing it to stocks or gold or something like that. And so in the moments of the banana zone, everyone is a genius. And that is a very scary time because most people are not geniuses. Almost everyone is not a genius, right? And yet we all think we are. And that is the reason why people get wrecked, right? Why do we think that diversifying your portfolio is putting some in lending some in this risky thing in FTX, some in this one Voyager, some in Celsius? It's all the same thing. But in those moments, we're like, yeah, this is diversifying, right? And it's really not. And so it is a wild world. I don't know for sure that we will get to this same world. We did it in 2017. We did it in 2021. I think it'll probably happen again. Most people or some people are like, well, will we get this craziness again? Because we don't know what that thing is. We don't have the NFTs of last cycle. We don't have the ICOs, right? We have meme coins, but we've had meme coins for many cycles. And so like, does it get this crazy? I don't know, but probably. Anytime we're in this sort of like boom of people making money, things get crazy. I mean, we've had tulip manias, for Christ's sake. If we can have a banana zone in tulips, then we're probably going to have another banana zone here in crypto. I don't see why we don't. If prices go up, if Bitcoin goes up by 2-3x, if ETH or SOL goes up by that, weird shit's going to happen. And there's just nothing we can do about it.
So when we enter this period, the hardest thing to decide and the hardest thing to know is how to separate the signal from the noise. When everybody thinks they're a genius, when every newsletter and podcast and Twitter influencer and Instagram and TikTok, et cetera, is feeling very confident and putting out information all the time, every day, saying this is going to 100x and this is going to go to this. How does somebody who is trying to make investment decisions make investment decisions? And how does that part of the cycle maybe compare? Because I think where we are right now is so different than what the banana zone is going to be.
I think so. Entering the banana zone, the first thing you want to do is like decide who you want to be in the banana zone. Right? Do you want to be a short-term investor and try to play the narratives and the trends and like move in and out of stuff? It's fun. There's a lot of people doing it, especially during the banana zone. There'll be 10 times more people than now. Mm-hmm. There'll be 100 times more people maybe, right?
Well, actually, I want to know, everybody listening, how many of you have done this already in the past month? Because there's already been that vibe of euphoria. And I've seen a lot of people who are making meme coin trades now. All of a sudden, you become a meme coin trader. And if you've done that, you got to think about, is that the type of trader you want to be?
So comment, tell us listening, are you a short-term trader or are you more of a long-term investor? Because this is key going into a banana zone, because things are going to get crazy, prices are going to go nuts, right? And you need to decide, does that price volatility matter to you? Does the narrative or the FUD or the whatever that happens matter to you? Or do you believe and have conviction in the thing that you're investing in more long-term, right? Because, for example, we've said that Maker, we believe, is a good investment, or Sky, whatever you want to call it now. And it's gone down since we've said that. And so a lot of people in our community are like, hey, what's going on here? The price is down. Should I still be buying this thing? And I'm like, hey, I'm investing in this thing for the cycle. Nothing's changed fundamentally. Still all good. There's just price volatility. This is normal in crypto, right? There's FUD around it right now because of the changes it had. That's normal in crypto. And so if I'm a short-term trader, I go, well, the narrative's no longer for Maker. I got to get out of that position. I got to go buy something else, right? I got to go buy Tau. But if I'm a long-term investor, I don't care. It doesn't matter to me right now, unless something fundamentally has changed, which I understand people want to know. But again, that means you got to do research. You got to separate the signal from the noise. If you're a short-term trader, you're more worried about the noise, right? You want to know, what are the narratives? What is everyone? What are the KOLs on Twitter and on YouTube? What are they spitting? What's TikTok saying right now? Like, what's the next thing that's going to be the next meme or the next meta? That's what you need to know if you're a short-term investor. The fundamentals don't matter to you. You don't care about revenues. You don't care about what's going to be the future, right? It actually doesn't matter. You care about the noise. And so that's fine if you want to do that, but you got to understand that's your mentality. That's what you got to be thinking about. If you're long-term, if you really are long-term and you're not trying to trade this stuff every day, then you've got to separate the signal from the noise. You've got to not allow these narratives or the price volatility matter to you, because in the banana zone, one, there's going to be so many stories that are spread about everything, right? There's going to be narratives that are spun. There's going to be price action where you'll go up 50, 100% in a week, and then you're going to shoot down 40% in a day. And that is really hard for your brain to manage, right? But if you know that you're here and you're investing for 12 months from now or 16 months from now, or maybe you're investing for another cycle from now, which is great too, then this shit doesn't really matter to you. And so you got to decide that quickly on who do you want to be.
How do you think about, because what I'm guessing for most of our listeners is that you are maybe a mix of both. You're majority a long-term investor.
Yeah.
And that is always going to be our advice, is that the majority of your investments are longer term, less risky. We've talked about the 80-20 rule a lot. What about if somebody is sitting there saying, okay, I'm long-term for the cycle on, my Bitcoin, my ETH, my Sol, and maybe a few others, but hey, banana zone, I want to try to get a little bit of, I want to try and get 100x or something like that.
Yeah.
How do you make that separation within your portfolio?
Yeah. So you got to learn to wear two hats. So the first is, okay, I'm going to be a long-term investor. That's the Milk Road Pro portfolio that we talk about all the time. A lot of times that we come on here and we say, here's what we're investing in, here's what we're buying. That's your long-term thing. You do that research, you look at the fundamentals, you keep an eye on those things, but you're not worried about the craziness in between. And that's maybe, it's up to you on your risk, right? For me, I'm probably 99% that. I actually am probably 100. At least right now, I don't have anything where I'm like, this is the thing that I'm trading, because again, we're not in the banana zone yet. So I don't think it really makes a lot of sense. So you take your portfolio, the thing that you want to put your conviction in, and it should be the large part, and you put that aside and go, this is my long-term investing portfolio here. You might move those things a little bit, but they're not in a lot of trades. It's very minimal, right? then you can come over and say, hey, you know what? But I want to get down on this banana vibe. I want to have some fun. I want to buy the shitty stuff. I want to play these narratives on crypto Twitter, and then go do that. But one, go into that knowing like fundamentals don't matter for that side of it, right? And what you're looking for is to be the first in a narrative, to be the first before the noise happens, and make sure it's an amount that you are completely fine with it if it went to zero. Because as I said at the beginning of this episode, a lot of people I know, their investments went to zero. And I don't think that's a thing most people understand. It's not like the stock market where you choose a stock that like doesn't go up or goes down 5% over the year. It's very much the chance that you go and buy this stuff to try to get 1,000x and it actually goes to zero. Meaning you put $1,000 in because you're trying to make 100 grand, but instead you ended up at zero. And so if that $1,000 means something to you, that cannot be in this portfolio because it is a P2P game out there, right? Like it's person versus person, and it is intense and it is fast, and you don't know what's right from wrong in a banana zone. It's already hard enough to tell. You go on crypto Twitter, you're like, well, what's real, what's not? And we'll talk about this a little bit. When we were at Salt Lake, I got to speak to a lot of founders, a lot of VCs, and started like questioning things. And I was like, oh, actually, things are not as they appear, you know, from what you hear on crypto Twitter, from what you hear on YouTube. And so you've just got to know these things. You've got to be aware of that and know that there's a good chance that you might get rugged, that the thing's just not going to work out, that you actually are being lied to. And so these are just things that you need to try and be aware of. So I'm not saying don't be that short-term guy. I think it's fun. It's exciting. You did it in NFTs last cycle. I didn't do NFTs much. Didn't pan out.
Did not pan out. Did not pan out. And you know, and what's interesting is the biggest lesson I learned in that, one, I way overdid my portfolio and went 90% into NFTs, which was a mistake. I went overboard in terms of the percentage that was high risk and non-fundamental. But two, the main mistake that I made is I didn't have a plan. I didn't have an exit plan. And when I also thought about my exit plan the same way I think about my ETH and my Bitcoin and my Sol exit plan. And my ETH, Bitcoin, and Sol exit plan are more based upon price targets that I have set that any of you guys could set your price targets too. Sure, maybe you don't know how to do TA or deep analysis, but you listen to us, you listen to a couple other KOLs, take an average, you can probably set some price targets and decide when you're going to sell out of these bigger assets. But in the shittier tokens or the non-fundamental tokens in the hype, it's very hard to have targets. So and you start to expect these ridiculous gains. Right?
And that was the biggest issue is that was a big part of your portfolio was these NFTs. Jay actually did really well in NFTs for a little bit there. He was making a shit ton of money. He was like, look, I'm a genius.
Right? Yeah, exactly.
That's what he used to say. I told him, you got to sell that Moonbird. He goes, screw you, Kyle. I'm a genius. And then he got wrecked. And the problem was that was a large part of his portfolio. If he just had 80% of his portfolio in ETH that year and 20% in those NFTs, he would have had his fun. He would have thought he was a genius. And he actually would have came out on top, still a genius, right? Because ETH has done much better than it was last cycle. But the problem was he didn't have a whole lot of ETH. He didn't have a lot of these fundamental ones because it was all in these shit tokens. And that's the key thing is you really got to separate those two portfolios.
And I think the thing in the shittier tokens, we got to come up with a better term than shittier tokens. But you guys get what we're saying. It's much faster. And, so the key thing is if you decide that you're going to trade a part of your portfolio and you're going to try for these more narrative hype-based trades, then you have to get in and get out in a week, in 2 weeks, in a month. Like it is very quick. And that is, a lot of people just don't have the time for that. Like you just don't. So if you're not willing to dedicate the time to looking at this on a regular basis, you guys can go back and listen to our episode with Zeneca from last week, where he pointed out 3 meme coin trades that he's following right now. And his time frame for each of them, the longest one was like 6 weeks, right? Like none of them are cycle long. They're all very short. The shortest one was like a week, I think, right? So, okay, let's go to, we have a lot of different guests on the show. And our goal, as you said at the beginning, is to make sure that you guys make the most amount of money possible in the cycle and that you do well financially. That is always our number one goal. And in order to do that, we try to bring on different guests with different viewpoints and different perspectives. They come from different careers. They view things differently based upon basically how they make their money in crypto and with their investments. Recently, we've had a lot of VCs on. We had Joe McCann on. Well, I guess he's a hedge fund, but investor. We had Kyle Samani from Multicoin Capital and a few others as well. When you listen to a VC, how do you listen to them differently than you might listen to somebody else?
Yeah. So one of the key things that's going to help you throughout the banana zone, but honestly just in life in general, is always think about the incentives. So some of you are listening to, what are their incentives? And so VCs are quite interesting. They're very smart. They come on this podcast. They tell a great story. They understand markets. They understand crypto because they're interviewing every single team in the space. So they're way earlier, right? They're way ahead of most of us because they're speaking with so many teams all the time that just are like, hey, I need capital, right? So well before they even think about having a token, VCs are already talking to all these. So they know in advance what are going to be the next narrative. So they're great to have on these on the podcast. I think they're super, super smart. But one thing you also got to understand about VCs is they also have a job. And their job is to make money for their LPs, right? The people that give them money, right? And how do they make money? Well, it's by finding investments that can do really, really well. And it doesn't matter if those investments do really, really well long term. What matters is, will those investments that they have, they put their equity, or they put their investment into equity, does that equity turn into a token? And does that token launch 10x, 100x from what they bought it at? And then can they sell it, right? It doesn't matter to them if this business works out for 10 years from now. In the non-crypto world, it does. It really matters. They have to buy companies that they think are going to work 10, 20 years from now and might IPO or get bought up by Google or whatever. In crypto, it's very different. The VC game is so different because you can invest in a company today and within less than a year, it goes liquid by launching a token, right? They're not expecting the equity of that company to ever get bought up. We've actually asked VCs this before, and it's like sometimes it might happen. Like maybe Uniswap Labs gets bought by Google someday, maybe, right? But probably not. But Uniswap Labs launched Uniswap token forever ago, years ago, right? And so the VCs that invested in Uniswap Labs back in 2019 or 2020, they've already made their money back. And so they don't care what Uniswap does anymore. They've already had their 100x, right? And they do this time and time again with every single token in this space. And so one thing to understand is like, will a VC go on and talk about ETH? Why would they? Right? What's their incentive for any VC to come in and pump ETH on a podcast? Zero. Because they're not buying ETH anymore, right? They've already done the ETH trade the last cycle, right? Or the last 2 cycles. They might hold some liquid token, but like VCs aren't trying to get a 3x or a 2x, right? Their goal is, we're going to invest in 100 companies, right, this year, and we're going to try to get 3 of those be 100x. So ETH doesn't fit their model. So even if they are bullish on ETH, that's not something they're going to put in, and they're going to put their LPs money in. And so they're not coming on a podcast to talk about Ethereum. Solana, even at this point, maybe not, right? Well, some of them are, because they still have big Solana bags without a doubt. And they have bags of the new apps that are built on Solana, right? Or the new apps that are built on, I don't know, Base, or on whatever they else, Monad or Sui or whatever, these newer ones, because that's where the money is. Because there's new people that are building there. They need money. Ethereum people don't need it as much, right? Because they've got big bags already, and they've got, working products. So there's less for VCs to do. VCs do best in new ecosystems. And so when you listen on YouTube and you hear every VC, what are they talking about? New ecosystems only. They don't talk about old ecosystems. They don't talk about Bitcoin. They don't talk about ETH, right? They talk about Sui. They talk about Aptos. They talk about Solana, because that's where all their capital is, because it's the only spot for them to make money right now. Now, I'm not saying that's a bad thing. I'm not saying Solana, Sui, or Aptos are not going to make it, right? I'm not saying any of that. I'm big fans of them. I mean, we've been bullish on Solana since $20. We've been telling our community to buy Solana for forever, right? I just think what you need to do is, when you listen, take the things they're saying, right? I'm not saying most of the things are wrong, but also understand where is their incentives. And their incentives are not for some of the other things, right? So you need to take what they say with a grain of salt. Just because they believe Solana is really good doesn't mean they hate Ethereum. They might spin that narrative because they know that there's thousands of people that listen to this podcast every day. And if they can get a few of you guys to put your capital over here and remove it from here, well, their bags make more and their LPs are happier, and they're going to raise a bigger fund next time around. So it's very, very key that you start to think about where are their incentives. The same thing with, like, what's his name, Murad?
Yeah, let's talk about Murad.
So Murad, same thing. Like, this guy,
Murad, for everybody who doesn't know, is the master of meme coins, the king of meme coins. He did a talk at Token 2049 that went viral. Murad, if you're listening, we want you to come on the show. So come on the show. Yeah. And he is now he's now known as the meme coin guy. So he is pumping meme coins.
Look, he made some amazing points on meme coins. We've talked about a bunch of the podcasts in the newsletter. I love his takes. I think they're very smart. But again, is he too far to one side? Probably, right? And why is he too far to that side? Well, look at his portfolio. He's got like $10, $20 million or something in meme coins?
Yeah.
And he specifically goes on podcasts and talks about the specific ones that he holds, right? And That's because incentives, right? Of course he wants those to go up. And again, that's not a bad thing, but again, this is a PvP market, right? And so you listening who doesn't have a voice, doesn't have a podcast, you don't have the upper hand like Murad does. Murad has tens of thousands of people, maybe it's hundreds, I don't know how big his following is now, who will listen to what he says. He's got the spotlight right now. And so he has an upper hand. Like, imagine trying to beat him. You're not going to beat him PvP because he can launch a token or go invest in some other token, say it on the next podcast. The token's probably going to pump, right? And so look at who you're up against. It's very hard to trade against these people because they're incentivized to pump their bags. And again, I'm not trying to say that everyone is a bad actor. It's just how the world works. And that's okay to push your narrative. We all do it in life, right? You think about politics right now. If you like Kamala or you like Trump, you probably go to your friends and you push Trump, right? Or if you're a Kamala person, you go and you push Kamala. And that's okay. We all like to push our opinions and our narratives. That's how kind of humans are. Just in the financial world, especially in crypto, there's just a lot of way to make some money off of that, which could be a bad thing, could be a good thing. I don't know. It doesn't really matter to you. You just need to understand it and make sure when you listen, that's what you're remembering.
Exactly. And I think the first question that everybody should ask, whether you're listening to our show, whether you're listening to another podcast, reading a newsletter, is just think about what's the incentive of that creator or of that writer or of that host or that guest. And if you can just frame it as what is their incentive, then it'll help you take it with the grain of salt that you need to take it with.
Here's the best advice I can give of trying to paint a picture of what's about to happen here with the banana zone. And it applies to this, thinking about incentives, etc. But what's about to happen is, let's say right now, everyone in crypto is sober, right? When prices are down the last 8 months, everyone's actually not just sober, but a bit bitter. Everyone's been a bit pissed off, right? A bit angry. Now, we've had a bit of price action the last few weeks, so we're not quite there. But you see the mood of crypto Twitter, of crypto people, crypto YouTube kind of change really quickly with price, right? You see it all the time. But right now, let's say we are sober. We are here at this like kind of bottom level. What's about to happen as price goes up? Let's say Bitcoin goes to 100K, so it almost doubles from here. It means that the fundamentals in the soberness of the market are kind of at bay. We're at kind of a fair price right now, I would say. But what's about to happen as liquidity comes into the markets and people start investing more and the price of Bitcoin goes up or ETH goes up or Solana goes up is everyone starting to become a genius. And so expectations go to here, right? The valuations of things go to here. The fundamentals will still improve every month, but the fundamentals improve linearly, just like this, always, right? But if you look at the last 8 months, we've gone down, we've gone up, depending on price, our moods go up and down, right? We're very pissed, we've lost our conviction, we're so scared, then all of a sudden things go up and we're like, okay, we're pumped, we're here. In the banana zone, things just go this way. They exponentially grow like a banana, but the fundamentals linearly grow, okay? And so you've got to understand that things get detached from reality. That's why NFTs can go and be worth $1 million. That's why you can take something that has no, like basically vaporware, and it can be worth $100 billion or whatever, because people just don't care. Your job is to stay sober. Your job is to become allergic to BS. You need to have a BS indicator or alarm at all times. Just go, that's bullshit, that's bullshit, that's bullshit, right? It's hard because you're going to get excited. You're going to get attached to these narratives. You're going to get like, you want to make the money too, but you need to go, that's bullshit. This guy's bullshit. This doesn't make any sense. So you need that like bullshit alarm, right? You need to be allergic to bullshit. And then the other thing is you just need to stay calm under pressure. When prices move like this and there's all these narratives and you think you've got to do this thing and then prices come back down here, it's like your mind can start to run and race and you start to go, shit, I'm missing out here. I missed that opportunity. Oh my God, my token's down this much percent, but this one's up. Like I got to trade more. I got to do all these things. And it's like your goal is to just stay calm, right? With all the noise and all the wildness, if you can just stay calm and you can just point out the BS, you are going to be 100x times better investor than if you let all that stuff get to you and you start jumping around that this VC said this and I don't even think like, oh, wait a minute, of course his bags are in that. Of course he's going to say that. Or this KOL is pointing this meme coin. It's like, well, yeah, no shit. The guy's got, $1 million worth of that meme coin, right? If you hear about it on Twitter or you hear about it on YouTube, you're already too late. When it comes to narratives, it doesn't mean you're too late when it comes to fundamentals because fundamentals take a long time to catch up, right? You can be buying things with fundamentals. I mean, Bitcoin, ETH, Solana, these are all things everyone's heard about and have talked about for years and years and years. And yet everyone just got the Solana in like earlier this year to like late last year. Whereas people who understood fundamentals, we had been talking about Solana all freaking year. We put our first pro report out about Solana in January when it was $8. And we were saying, hey, fundamentally, this thing makes sense, but it didn't have the narrative. All of a sudden it got the narrative in October, November, December of 2023. Everyone starts piling in, and look, we're already lower than we were back then, right? And so like fundamentals take time. If you're hearing fundamentals, you can get in on that stuff. But narratives, these are quick, as Jay said. And like if you're hearing about it from the biggest names on Twitter and on podcasts, you're too late from a narrative perspective. And that's a key thing that I think people need to understand. Yeah. You're generally not too late on a fundamental perspective, but you're definitely too late on a narrative perspective. So this goes back to your two hats of short-term investor, long-term investor.
Yeah, and it just makes me think, I'm laughing because I walked into our meeting room this morning on the retreat, and one of our team members said that they sold their goat, and somebody else said, should I sell mine? And somebody said, all I'm seeing on crypto Twitter is about goat. And they were like, sell. That's when you sell. Or I really like Zeneca's strategy, which is you sell majority and you keep a moon bag. So you keep a small piece of it just in case, it ends up being the next Doge.
Counter trade the noise is the best thing you can do, right? If everyone's talking about one thing, hopefully you were in it before everyone was talking about it. And then the moment everyone's talking about it, you sell. Mm-hmm. Which is the same thing with our whole thesis here. Even our long-term investment thesis here of crypto is we're playing the cycle. What does that mean? The cycle is right now there's only a certain amount of people in crypto. Let's say it's 1 million, 2 million, I don't know, whatever it is. People are actually buying tokens in crypto. It's not a lot of people. And there's no one new right now. Nobody new is coming into crypto. And so everyone's just, this is why I say it's P2P. Everyone's just kind of like going against each other, trying to jump into whatever. There's no new capital. What we're waiting for in this cycle is for the new capital to come in. And that's what the banana zone is your mom comes in, right? Your brother, your sister comes in, your friend comes in, your uncle comes in, the taxi drivers come in, their capital comes in. And then when it becomes consensus that crypto is the next big thing, that's when you're out, right? That's when you're like, I'm done, I'm selling, I'm out. I still think crypto is going to become the next big thing. But if my mom thinks it's the next big thing, then it's not right now. We're over. Remember, at that point, you're drunk if you're believing in that stuff. You've drunk the Kool-Aid. You need to remain sober and come back down here. So that's the whole idea of our thesis here around the banana zone is the banana zone is everyone else in the world coming in, giving their liquidity, thinking they are early, and yet they're not. You are early because you're listening here right now before the banana zone. And so the whole big picture here is wait for all the people to come in, and that's when you pull out. The same is true on these daily, weekly, monthly trades of meme coins, right? It's you want to be in early. Once everyone on Twitter is talking about it, gone. You got to get the heck out. And I know it's hard to do that because when everyone's talking about it, that's when you're like, oh yeah, that's that bag bias. Like everyone, I'm a genius. I'm in this thing. Everyone's talking about it. This is fun. Let's keep going. Absolutely not. That's the time you got to get the hell out. Hardest thing in crypto to do, but if you do that, you will win every time. Almost every time.
Kai, thanks so much for breaking this all down today. So happy to be together in person and to see the whole team. I want to know, everybody listening in, do you want to see us talk more about long-term investments within this cycle, more of the 6 to 18 months investments, or are you interested in us more talking about these short-term, higher risk, narrative-based investments, the 1 week to 1 month to a few months type of investments? Let us know, comment on YouTube or wherever you are listening. As always, thanks so much for listening in. Have a wicked awesome day.
High five. Let's go.
Let's go. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note. This show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.